Hello, welcome to PSR, People Speaking Rail. We are those people. I'm Mike Bowden-Distel. I'm head of intermodal solutions here at FreightWaves, work primarily on the data side, and I'm joined with my co-host Joanna Marsh, who is a writer, editorial writer at FreightWaves, follows the rail industry. Joanna, how are you today?
Good. How are you?
Good, thanks. Yeah, you just got your rail roundup out, which
Yeah.
is, I guess, a newsletter. You're talking about the Port of Virginia upgrading facilities. What's happening in Norfolk?
Yeah. So it's actually two places. The Port of Virginia said they're investing about 18 million in two projects. One's actually at the inland port near Front Royal, which is in Northern Virginia, inland, obviously, and the other one I believe is in closer to Norfolk, and that's with the maritime terminal. And um, the one in the inland port, that's the one I believe the Norfolk Southern has a connection there with its Crescent service, and they're looking to to place some cranes there, and to help sort of facilitate and expand capacity at the inland port. And then I believe at the other place, the intent is to also again kind of increase capacity, but with truck movements actually, and so kind of giving truckers someplace more space to wait on things, as well as just kind of I think with the flows of the facility there. So that's what's happening. And I think they said it's part of part of a broader sort of multi-billion-dollar gateway project. You know, so.
Yeah, that seems to be a theme. Some of these inland ports, we saw last week, Canadian National investing in that facility, and I think it was Calgary. So it's sort of an inland port. It almost made it sound like it was going to be kind of like an Ontario, California of Canada, sort of moving those off of the coast. It was interesting. CN was talking about using that for more transloads, so more potentially domestic intermodal, even though Canada is largely, really primarily international intermodal. So I thought that was interesting, really sort of touches on the theme of all the investments along the East Coast ports. There's been so much over the last few years in terms of dredging and those things. So we'll continue to watch that. You also had this other article, which I think we have a graphic to show, latest rail safety bill takes aim at wheel-related train derailments introduced by lawmakers in Pennsylvania and Ohio. What's happening with this?
Yeah, so that's interesting because some of those lawmakers were also involved in a March bill that called for two-person train crews, and also I believe some of, let's see, I mean that was the main thing that I remember from it, but also calling, I think, publicly to look at wayside detectors. But looking at wayside detectors. But this more recent bill is kind of looking at rail car inspections and rail car maintenance. And I thought it was interesting because I was speaking with, being in touch with a source who was an engineer, and he was wondering like why there hasn't been as much attention in the media in terms of, looking at bearings, since, if NTSB said that, bearings might be an issue in the February 3rd Norfolk Southern train derailment in Ohio. There's all this talk, there was a talk about the ECP brakes and the two-person crews, and then so where is the research of, where's the support on finding bearings? And so I thought this bill was interesting because, it does talk about, looking into, wheel-related train derailments, which is getting closer to the issue of bearings. And so we'll see, what happens with that bill. And it seems to have garnered some support from some of the unions that represent rail mechanics too. So I'm not sure where the industry stands on it, but I think yeah, it's just kind of an interesting overall because looking at some of the repair kind of finer points, that you might not necessarily not be as sexy necessarily, but still. Uh,
Yeah, I mean, I
yeah.
think the unions tend to like these type of bills. I mean, especially if it mandates two-person crews, they love that.
Mhm.
But even things that just require sort of, I think, additional inspection and those things, and requiring an inspection that you have to do manually instead of with some kind of automated device. I imagine the AAR would be
Mhm.
against it. Sort of, put sort of more rules, sort of puts them more in a box in terms of sort of complying with those things. That's another thing we'll continue to watch. And do think that it sort of hits on exactly what potentially caused that February 3rd derailment. But I'm not sure I totally agree that, people saying, okay, there hasn't been a lot of attention on those wheels. To me, it seems like there's been a tremendous amount of attention on those wheels, but still it sort of remains to be seen exactly why that rail car wheel set heated up to such a degree in such a short period of time. So, I think you're going to see a lot more of these things, coming out in the coming months. So we'll continue to follow your, articles, and there's a, newsletter that you can go to at freightwaves.com to follow the rail news in addition to sort of most everything else that we cover at FreightWaves. And with that, want to go into today's guest, who, like FreightWaves, is in the data business. So our guest today is John Schmitter. John is a co-founder and COO of Rail State. This is a company he co-founded in 2019 that delivers unbiased third-party railroad network data on performance, volume, a variety of other things via detectors that go along the wayside of this. And interested to see how you can leverage data to help you if you're a shipper, analyst, government agency, et cetera. John, thanks for joining us.
Hi, thanks for having me. How are you, Mike? Hi, Joanna.
Yeah.
Hi.
And you also wrote an article the other day on FreightWaves.com, a viewpoint about asking where's the railroad growth. We talk a lot about railroad growth, but where is it? So what was the crux of this article? You don't see the growth either.
No, that's right. I think as the railroads talk about growth, I think they you usually hear them talk about smart, sustainable growth, which to me always seems to mean that that they would no new train starts, no new services. They basically want to attract a growth that will produce the exact same margins as they do now, without even though business might be profitable, whether it may not be as profitable as the current base of business. And they're just very careful about doing anything, especially capital investment, to expand that growth.
Yeah, I mean, you think about something like intermodal, which is supposed to be the growth area of railroads, and it's almost going to be, by definition, dilutive to the margin because there's a built-in competitor there with the highway. So, if the objective is to lower the operating ratio, then you wouldn't pursue intermodal. But the railroads all say they're trying to maximize, operating income, and taking that into account, more so than that operating ratio number. But it does seem like when activist investors, try to kick out a certain management team, it's usually because that operating ratio is higher than the competitors.
Yeah, that's right. And investors seem more concerned about that operating ratio and the financial performance than they do to growing volume. And really, when you look up the railroads management structures, and they're are really set up around that to manage that very, very carefully, to take on a new piece of business, or to do anything that would substantially grow shipments from a given customer is something that takes quite a lot of effort amongst the commercial people in the railroad to make it happen.
Mm-hmm. Yeah, we hear a lot about rail service issues, and maybe they're a little bit better now because volume is down. I mean, particularly intermodal volume is down double digits, but even overall carload traffic's down some year to date. I mean, what do you think is the biggest constraint there? I mean, the railroads say it's people. Is it more to it than that? It sounds like capital investments haven't been at a level in your perspective that it would really need to be to improve rail service.
Well, I think it is. I think it is. It's true that the limitation has been people. One of the things when we started Rail State and started to gather in a lot of information about the movement of trains in Canada, I think one of the more surprising things we saw was that the actual train volumes on most of the rail segments in Canada is really quite a bit lower than the actual physical capacity of those lines. So the constraining factor is crews and locomotives, and the amount of capacity the railroads make available is business decisions on their part, and they decide what capacity to make available, and they very much constrain that capacity as a business strategy. They're mostly monopolies in the market they serve, and capacity constraining capacity is really a financially a smart business decision for them. Whether that produces good outcomes for their customers, for the economies of the U.S. and Canada is quite another story.
Yeah, actually, if you don't mind kind of going back and maybe explaining, what Rail State is briefly, and what was inspiration for creating that company.
Sure. Well, I've been in this industry basically for my whole career. I worked for two different Class I railroads. I started in the operating department at Conrail, then was also in the marketing department, and spent a few years with LTL trucking companies and with Hub Group in the intermodal space. So, actually in those two businesses, customer service responsiveness and competitiveness to gain market share is quite a different thing than it is in a Class I railroad. But I also was at Southern Pacific Railway for right up for the last 6 or 7 years or so, right up until Union Pacific acquired Southern Pacific, and I've been mostly as a consultant working with shippers since then. And that was 17 years ago. And we've done, my partner, my co-founder Jamie Heller, and I have done a lot of work with shippers in the U.S. and Canada, everything from commercial negotiations all the way through operating and operating plans for industrial rail yards and how they should deploy assets and so forth. But one thing that really stuck out on us is the fact that in the rail business you can track your own rail car. If there's any railroads will provide the car location messages. You could put GPS units on your car, but there's no network visibility. You can go on any of the other modes. On the ocean, you can find the location of every ship anywhere in the world in pretty much real time. So you know what the state of that network looks like. Same thing with every airplane anywhere in the sky, and you have Google Maps or Waze for the highway infrastructure in North America, so you can always know what the condition is. But what do you have for railroad network visibility is basically system average train speeds from 2 weeks ago. It's quite a stark difference. And it became clear to us from the consulting engagements that in order for shippers to achieve better outcomes, they need more information, need more visibility. They've been asking for it for 30 years, and what the regulators have been able to supply is just those system average statistics. So, Rail State, our mission is to basically be the Google Maps and Waze for freight railroads in North America.
Mm-hmm. Mm-hmm.
Yeah.
Yeah. Why did you start with Canada rather than the U.S.?
We started in Canada. It was really a business decision of ours. A lot of our consulting work has been in Canada, and it's so we are very familiar with all of the large shippers in Canada. We've had consulting relationships with many of them. We were able to start the network in British Columbia. It basically provided an opportunity for us to build really a condensed network as an additional prototype to that was small enough to be contained that we could manage it initially, and yet large enough to provide value for our initial charter clients, and to really prove the concept that that the network would work there. So it's then what we were doing would scale and have the operational capability to grow it. And then when Transport Canada, the rail regulator in Canada, became a customer, they wanted us to deploy the network across Canada as quickly as possible. So we stayed in Canada, and we're just about completed the Canadian network, and we're starting in the U.S. now. We'll have substantial parts of the U.S. network covered by the end of this year, and we'll continue to do deployments in 2024.
Yeah, that's exciting. I imagine the Surface Transportation Board would like to see that data too, because they've been asking the Class 1 railroads to provide more data on service, but your data provides an independent look at it, not having to take the railroads sort of word for it. I hear that from shippers, shippers as well, where they, someone say, well, they're big enough, shipper that they talk to the Class 1 railroads every single week. But you are getting a story that's going to make them want to keep the intermodal containers on the railroad and not pull them out and move them on the highway if there's some service issue.
Yeah, when you think about it, the customers, even if the intermodal business aside, but companies that are shipping carloads on the railroad, even if your location is captive to one railroad, many of these large industrial bulk shippers, even forest products, you name it, have invested hundreds of $millions to create optionality for themselves. So even if one location is captive to one railroad. You may have other locations on other railroads that could ship the same product to the destination. Some locations you may have more than one railroad as a choice. So they invested. You also have the ability, if you actually know what's going on, you also have the ability to make adjustment in your own operation. For example, you can. If you knew there was a problem 2 days out to making your next shipment, that there was an issue on the part of the railroad where that shipment was going to go, maybe you say, all right, maybe I'll ship those orders in a couple days from now, and I'll ship other orders now. Keep your assets moving, keep the customers satisfied. But if you don't know there's a problem on that part of the railroad, you're just going to keep shipping more cars right into the same problem, and that is the situation most customers are in now.
Yeah, I think you were when we had talked before in I think a few months ago. You had mentioned something in British Columbia, and I think it was Tech Resources. Could you maybe explain exactly like what happened with that, and how that how Rail State worked in that situation?
Sure. Tech was one of our original charter clients. Their whole world is from eastern British Columbia towards the ports of
Mhm.
Vancouver, and to some extent up to Prince Rupert. Um, right. So if you probably recall in the end of 2021, it's some severe flooding basically wiped out the CN and the CP between Kamloops and Vancouver. The rail was out of service for a couple weeks. And if you look at the pictures about what happened, then both railways did a remarkable job, really commendable job in getting the line back in service. But if you're a typical shipper, right, and all you know is the location of your own car, um, if unless your car was involved, or was on one of the trains that was stuck there, you wouldn't even know it happened until uh, until the until you saw it on the news. And in most instances on the railways really don't make it to the news. The train flow just stops for one reason or another. Now, our customers could see that hey, this is a piece of railroad that's seeing a train every 30, 35 minutes or whatever, and it's now 3 or 4 hours with no trains. They know there's something wrong, and their trains are not involved in it. Their train didn't stop yet, and they were able to. Tech was able to jump on it, and say, all right, here's what's going on. They realized what the situation was. They're able to talk to the railway in a more informed basis. But to them, it discovered they had 4 train sets stuck on the Vancouver side of the washout. So but they could also tell from our data, from the rail state data, that the BNSF was moving okay between Vancouver across the border to the U.S., and that the CN also was moving okay between Kamloops and Prince Rupert. So Tech was able to contract with the BN to get those 4 trains out of there, move them through the U.S. back to their mines, load those trains, and redeploy a ship to up to Trigon terminals in Prince Rupert, and ship those 4 train sets and load that ship. They told us that was a cargo they wouldn't have got otherwise. Every one of those ships has $50 million of coal on it, $50 million in sales for Tech, $50 million for the economy of Canada. Yeah, it's all of that. But you think about, though, Tech totally acted in their own self-interest, but you look what it did for everyone else. They got those 4 train sets, that's 600 cars they took out of Vancouver, which enormously helped the CN and CP there. They freed up empty train slots for those cars moving back, and loaded train slots that they used where capacity was available up to Prince Rupert. So they made capacity available for everyone else. So the fact that Tech knew what was going on had huge benefits, not just for them, but for everyone else. And that was an export ship that Canada got they wouldn't have got otherwise.
Yeah, that makes a lot of sense. You can really see how valuable that is to be able to make routing adjustments like that when there's some issue. I mean, in Canada you have issues like avalanches, and of course there's floods everywhere, and all those things. Have you had any difficulty with getting either permits, or just local governments pushing back on putting the sensors along the wayside of the track? I mean, I guess the railroads would own the track, but it probably would be off the track, so maybe they wouldn't have a say. But have there been instances where just local governments didn't want you to put those sensors on, or any issues there?
Well, let me be clear about how we do this. Our sensors are deployed well off the railroad's right of way, on private property, on houses, or small businesses. In doing the installation, we don't trespass on their property. We don't do anything like that. The devices themselves are passive devices. Basically, we're taking pictures of trains. So you're not the permit isn't required to do that. So we haven't had any pushback from governments, and in fact, the government of Canada is one of our customers. So it's so it's our goal. We don't interfere in the railway's operation at all. So we have arrangements with the owners of the properties where we put those sensors, and it enables us to the technology enables us to see what we need to see from quite a ways away.
Yeah, that's good. That clarifies that. It was something I was curious about, but that makes a lot of sense, and really can understand the value of this business, and data is so valuable to sort of all these parties. I mean, we didn't even talk about how the value is there for commodities traders, analysts that might be looking at that, and like the instance of tech coal. I'm sure there are financial institutions that would be interested to see just how much they're moving and make some trades based on what they think the company is going to do for the quarter, based on how much volume they're moving on the railroad. So all of those things, you have other constituents in there that would find this valuable as well.
Yeah, we think that's the case. We don't have any commodity traders as customers yet, but it's most of them, the ones we've talked to, seem more interested in the U.S. than they are in Canada. But you're right. I mean, the idea would be to say, there's no the railroads publish weekly statistics. The AAR does that basically shows the total volumes of grain or metals or coal or whatever. But that information is not geographically specific at all. So what we would be able to provide to a commodity trader is basically real time data. Essentially, we could just about tell you, how much grain or crude oil was loaded in Canada this morning, and it's and where that's flowing, and get the real time look on where the commodities are flowing, and a real time look at any changes that are made there. So, our data, they would incorporate it in their models with other data that they get, and then use that, use their own models to predict what they should do, what would be a good trade, or when is the time to unwind a trade that they've got in place.
Mm-hmm.
So that's
exciting stuff.
At least that's what we think it'll be available for commodity traders, but we're still working on it.
Mm-hmm. Yeah, what's interesting with data businesses is sometimes you have customers, the early customers sort of all fit one description, and then when word gets out a little bit that this data is available somewhere, you have another constituent come in, and your sort of business mix can really change. But this is great stuff. And how can people reach out to you and your colleagues at RailState?
You can reach out to me at you go to www.railstate.com. You can just click on the contact us on the website, and we'll get right back to you. People can also send me an email, johnschmitter@railstate.com.
Great. Well, thanks so much.